For all our faults, this is still a place where 4 or 5 or 6 kids can commandeer a garage in Sunnyvale, California, and out pops Google. America's private prosperity is in spectacular shape. But the collective, the political collective known as the United States, is an absolute disaster.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Rick Rule joins us today. Rick is a well known investor and speculator in the resource sector and is often found as a keynote speaker at resource conferences. He is the founder of Rule Investment Media, and later, he'll be telling us about his other venture, Battle Bank. And we are delighted to have Rick join us once again today. It's time to saddle up and silver up for Rick Rule. Rick, welcome back to SBTV. How are you doing?
Patrick, thank you. I'm doing beautifully. The better for visiting with you and your audience. Thank you.
Thanks for being here. I see you with that nice looking Battle Bank polo. Could you tell us a bit of how that Battle Bank venture is going?
For the listeners who don't know about Battle Bank, a little history. A group of us years ago formed a bank called Everbank, which was one of the first American online banks. We grew that bank from zero to about $28 billion in deposits before selling it to Teachers Investment and Annuity. Some time passed, the employee non-competes passed, and the market has asked us to start another bank, Battle Bank, which we're in the process of doing. The bank is an organization waiting final FDIC approval. The other regulators have approved us. In brief, the proposed services of the bank will be somewhat like Everbank was. No branches, which lowers our non-interest expense, which increases the amount of interest that we can pay you for deposits. Our special products will be money market accounts so that you can earn high interest rates even on your savings. We will also offer certificates of deposits in 22 currencies, not just US dollars. So international savers and US savers can save federally insured deposits in 22 currencies. Importantly for your listeners, Patrick, the bank will offer credit facilities secured by individual holdings of gold and silver, provided that they're held in vaults that we know and love and understand. As far as we know, there is no other bank in the United States that offers credit facilities on gold and silver bullion or platinum and palladium bullion, which is held in segregated accounts. So we think that'll be a first. We're looking forward, I suspect, to a hard launch, which is to say, to be able to open the bank to depositors and borrowers in the middle of this summer. We look forward to any of your listeners, particularly listeners in the United States and Canada, who are dissatisfied with their relationship with their current bank. They should go to battlebank.com, send up on the waiting list. By the way, there is in excess of 12,000 people who have already signed up, expressing an interest in doing business with us, either as high yield money market depositors, foreign currency depositors, or people interested in establishing a credit facility against their holdings of physical gold and silver. Once again, battlebank.com, or go to ruleinvestmentmedia.com. And in the question and comment section, simply write bank.
All right. Thanks for the insight on this one. It's 22 different currencies, all FDIC insured.
Yeah, we did that before with Everbank, and it was extremely popular. There are other banks in the United States which will allow you to do CDs in other currencies, but they generally have $1 million minimum. At Everbank, we managed to get that minimum down to $5,000, so it was much more useful. Useful as an example for a first-generation small businessman who had, let's say, a family business in Singapore and then also a family business in Los Angeles. By being able to have CDs in both US dollars and Singaporean currency in the United States, the businessman is able to do foreign currency transactions between his or her two accounts for 50 basis points, while the large banks, including the Singapore-based banks, charge 200 basis points for the same service. That was extremely popular with first-generation businessmen in the United States the last go round, and I suspect it'll be equally popular today.
Yeah, I suspect it will be as well. All right, Rick. Moving on, I'd like to start off with your opinion on the so-called Magnificent Seven. I mean, we're seeing roughly, I believe, 30% of the S&P market cap concentrated in just these companies alone. And not being any type of financial advice here, but noting that 30% market cap, how do we read the opportunities or risks in the equities markets?
Well, with specific regards to the Magnificent Seven, they are truly magnificent in terms of their free cash flow generation and in terms of their market dominance. I think they're spectacular companies. I need to say, Patrick, at 71 years of age, I don't know enough about technology to understand their product pipelines and their ability to continue to produce in the future as they've produced in the past. The consequence of that is that I don't own the Magnificent Seven because I don't know enough about them to know whether or not their valuations are warranted. I do note that I no longer own S&P 500 index funds because the S&P 500 index is so concentrated on the Magnificent Seven that my feeling is I don't know enough to own the index. My own general market securities portfolio consists largely of Berkshire Hathaway. I would prefer to let Warren Buffett do my stock picking for me and to have that fund, if you will, housed within an insurance company so that I pay less tax ultimately. For people who are perhaps younger, perhaps better educated in technology than I, uh, people who are able to assess the ability of the Magnificent Seven to keep up their market share, keep up their margin, and keep up their cash generation, they may or may not be attractive. The simple fact that they've done so well in the past suggests to me that some of the market cap may simply have to do with trend following and momentum. And I'm a big believer myself in reversion to mean. So, absent knowing enough about those businesses to justify their current valuations, I don't own them.
If you're enjoying this interview with Rick Rule and I, please consider subscribing to our YouTube channel. And if you're looking for price exposure to gold, silver, and platinum while being fully backed by physical gold, silver, and platinum with some of the lowest prices around, I'd like to invite you to take a look at Silver Bullion's product, Stargrams. Go to www.silverbullion.com.sg, go to the Precious Metals tab, and click on Stargrams. I think most people would agree that this technology, AI technology, it is growing. Would you say that perhaps there is this kind of a AI bubble that might be going on with so many companies jumping in on this craze that a potential, let's say, year 2000.com collapse could be brewing?
Patrick, for me, the risk is personal. Do I know enough about a certain AI technology, its application, the competing efficacies of different technologies? Do I know enough to invest? I am invested in artificial intelligence as it relates to publishing, which I do know something about. I'm invested in artificial intelligence as it relates to banking, something I know something about. I'm invested in artificial intelligence as it relates to mining and oil and gas, something I know about. I'm not invested in artificial intelligence technology or any other technology in fields where I don't believe that my knowledge is sufficient to understand the nature of my investment. I am not interested particularly in taking general market risk. I'm not one of those who believes that the market itself is an investment or even a subject. I don't believe the market is a source of information to me. It's merely a facility to buy and sell fractional ownership in businesses. And if I don't know what the business is worth, really, if I don't understand the business, I don't buy it, I don't sell it. Is artificial intelligence a bubble? In a sense, absolutely. You are seeing conglomerations of promoters who often failed in the gold business often failed in crypto, often failed in pot, regrouping and raising money and telling stories so that they can fail in AI. Will AI be a technology that changes the way you and I live and do business in the future? Absolutely, positively, without a doubt, yes. We're approaching the singularity. We're approaching a period, if we haven't passed it, where, as a consequence of information processing technology and machine learning, that the ability of machines to do certain types of intellectual formulation, even including writing code, but more particularly in mining and exploration, assimilating vast amounts of data from different disciplines and looking for concurrent anomalies, which aids exploration. We are definitely entering into a period in the next 20 years where human achievement will go at warp speed as a consequence of AI. But that doesn't mean that a 71-year-old inadvertent Luddite like Rick Rule should invest in the entirety of the application. And I would suggest your listeners, need to invest in application technology in fields that they understand well enough to understand both the risks and the rewards associated with investing or speculating in AI.
Do you think we're at a point where it may be getting quite alarming, where these companies will have so much influence even over government policy decisions?
I'm hopeful about that. My hope is that some of these companies become big enough to resist governments. I would rather be a customer and a shareholder than a subject, which is to say, the idea that a supranational company based someplace like Singapore has as much power as a central government, but has to provide a service for me, has to sell to me, has to rely on me for investment, as opposed to a government which can merely tax me and can in fact arrest me and incarcerate me or even shoot me if I refuse to pay tax or subject myself to its arbitrary will, seems to me to be a very healthy development.
Hey, Rick, by the time this interview is posted, the FOMC probably will be having their meetings. Maybe we'll know the outcome. What do you see this next FOMC meeting bringing up? I mean, with the Fed, what do you think they're going to do as far as the rates and the market reaction to follow?
Patrick, I'm not an economist, but I do have a bank application in front of the Fed right now. So I've spent a reasonable amount of time talking to lower level Fed employees. I think the Fed is much more hawkish than the market believes. I think the Fed believes that the American economy, at least, is in pretty good condition. And certainly economic activity and employment would tell you that it is. That isn't to say that there isn't suffering in the US, by the way. But the Fed believes that the only governmental entity that stands between politics and the demolition of the US dollar is, in fact, the Fed. They don't see any discipline with regards to spending or borrowing in the legislative branch or the executive branch. They see an economy that's fairly strong. They also see inflation that is higher than the inflation stated by the CPI. And I believe, at least among the Fed employees, that there is a resistance to any near term loosening of monetary conditions or any reduction in the interest rate. If, by the way, the legislative branch and the executive branch desperately want lower interest rates, there's an election coming. So if the political forces in the country force the Fed to lower interest rates, I think you're going to have a circumstance that resembles something like 1976, which is to say, an understanding among the investment community that the gloves are off with regards to inflation. If you see it, I think you're going to see an explosion upwards in equity markets, and I think you're going to see an explosion upwards in gold and silver prices. But I don't think you're going to see it.
All right. Yeah, I was going to ask you some questions about the election, but I think I would just simply ask, what is your opinion on the state of the US right now and also the state of the US dollar?
The private part of the U.S. is in very good condition. The Magnificent Seven is an example of the manifestation of American culture and ingenuity. For all our faults, this is still a place where 4 or 5 or 6 kids can commandeer a garage in Sunnyvale, California, and out pops Google or out pops Apple, where a nerd, a data scientist, can hole up above a coffee shop in Seattle and out pops Amazon. The truth is that America's private prosperity is in spectacular shape. But the collective, the political collective known as the United States, is an absolute disaster. We have a circumstance right now where we're riding high on our individual tenacity and brilliance. And that's so astonishing that it funds our collective stupidity. The political class is truly at war in the United States. The old Mencken quote about elections being advanced auctions of stolen property is much more true now than it was at his point in time. And the polarization and the institutionalization in politics has reached absolutely absurd levels. On the one hand, you have a machine candidate, Biden, from my point of view, truly a despicable human being. And he's running against somebody, a self serving, transactional despot. If you read Trump's book and you took seriously his admonishment as to how to get ahead in life, you would never do business with him or vote for him. So we have a country on the one hand that is still a beacon for high quality immigrants from around the world, a culture that can still, from a standing start, create Microsoft and Google and Apple and Amazon, Tesla, and that is housed in a political constituency that exports war around the world and does its level best to bring divisiveness and hate into the popular culture. It's a very odd country.
That's the nicest thing I've heard anyone say about the US in a long time. Just being an odd country. So I think that's a good thing.
I'm I'm simultaneously proud and ashamed to be an American. When I look at the Magnificent Seven and I look at the tremendous contributions to humankind that have come out of American ingenuity and the private side of American society, I'm insanely proud. And when I look at the spectacle of American politics, when I consider the fact that our defense budget is larger than the combined defense budgets of every other country in the world, when I look at the weaponization of the U.S. dollar and the attempts by the U.S. government to suborn people in other countries to our political will, I'm ashamed.
Completely understand that. Rick, I want to move over into the metals. Gold, it's hit another all time high. What do you think is driving the momentum for gold?
It isn't private buying in the United States, Canada, or Western Europe. It's right now, statistically, central bank buying. I think it's a direct reflection of the weaponization of the US dollar. I think many central banks and political establishments in many countries are tired of the extraterritoriality of American imperial policy. I think that they understand that the United States is debasing its own currency, and the United States is making investments in U.S. Treasury securities much less attractive. And they're acting in self defense. I think, too, contrary to popular opinion, that part of the central bank purchases of gold have to do with the fact that while they don't trust the U.S., they trust us more than they trust each other. And they know, as an example, if you're China, that you don't want to build up too many rubles in your export account for fear that the Russians won't let you buy anything with them. They would much rather transact in gold than they would in their own domestic currencies, which, as bad as the US dollar is, are even worse than the US dollar. Doug Casey famously said the US dollar is an IOU nothing. The euro, backed by what, 16 countries, is a who owes you nothing. And the BRICS currency, the proposed BRICS currency, is in that context a nobody owes you anything. So the alternative for economies seeking to do business with each other outside the SWIFT banking system, outside the US dollar, really comes down to gold, 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 or gold. If you see a circumstance where the retail investor, particularly in the United States and in Western Europe, comes to be concerned, as they came to be concerned in the early part of the decade of the 70s, about the deterioration of the purchasing power of their savings in euros or in US dollars, then you will see follow-through buying of gold from individuals. When that happens, as happened in 1972 and then again in 1976, I think the top is off. Whether that happens in 2024, frankly, Patrick, your guess is as good as mine. People's expectation of the future is set by their experience in the immediate past. And for Americans, their experience in the immediate past is pretty good. Equity markets are in really good shape. The bond markets, against all odds, are holding their own. The banking system, despite the strains with regards to commercial real estate and duration risk, are in pretty good shape. Americans are not afraid right now, at least Americans with money. And the consequence of that is that retail demand for bullion in the United States, in Canada, and in Western Europe is not strong. Retail demand for gold, at least among the people, the 80,000 people worldwide who are subscribers to my services, in emerging and frontier markets, particularly in cultures with a long-standing affinity for gold, which is to say Chinese people, Japanese people, Korean people, Indian people, Pakistani people, that interest is very strong. Very, very, very strong. When I answer questions from my own database, if I'm answering questions that have specifically to do with bullion, how to get bullion, where to get bullion, the overwhelming proportion of those questions come from people who are domiciled in frontier and emerging markets countries or recent immigrants to the United States and Canada from those countries.
That's pretty interesting. That's pretty. I'm gonna have to look that up as well. Uh, Platinum. How do you see the outlook for platinum? Let's say with consideration to things like hydrogen cell technology, green technology moving forward.
I own a bit of platinum and palladium through the product of my former employer, the Sprott Physical Platinum and Palladium Trust. I own it because the narrative associated with platinum and palladium is all bad. The markets believe, I think because of political leadership in the West, that the internal combustion engine is going the way of the dodo, and hence platinum and palladium utilization in catalytic converters is in inexorable decline. I believe that the internal combustion engine will be with us till 2060 or 2065, meaning that I see 40 years of continued demand for platinum and palladium. I see, too, platinum and palladium prices depressed in large measure because of Russian selling. I saw this before in 90, 91, and 92. When the Russians need money, make no mistake, the Russians need money. Wars are expensive. They sell whatever they have in the cupboard. And what they have in the cupboard, particularly right now, is platinum, palladium, and nickel, all of which they're dumping on world markets, just like they did in 90 and 91. I own platinum and palladium as a speculator because platinum and palladium supply comes from South Africa, Zimbabwe, and Russia. And if you had real social collapse, political collapse in any of those countries, particularly those, South Africa and Russia, you would see a precipitous decline in platinum and palladium supplies. And because of the utility of platinum and palladium, you would see a precipitous increase in price. Patrick, it takes about $125 worth of PGMs right now to fabricate a catalytic converter, which allows the sale of a $40,000 or $50,000 car. If the platinum price doubled, it would have no impact on the finished price of the product that drives demand. So the inelasticity of demand relative to price is really attractive to me. Will there be a collapse in South Africa? Will there be a collapse in Russia? I don't know. But it seems to me that the downside in terms of platinum and palladium over the next 5 years is fairly small. And the potential, I'm not saying it's going to happen, the possibility of supply disruptions, politically or socially inspired supply disruptions in South Africa and Russia is reasonably high. If you had that disruption, you'd see a doubling or tripling of platinum and palladium prices. But you will, I think, see an increase in platinum and palladium prices within 2 years simply because the Russians will run out of inventory to sell. We saw this before in 1992, and I suspect we see it again in the next 5 years.
Okay, platinum, palladium, uranium. What are you seeing with uranium? I'm pretty sure you have a pretty positive outlook with this.
Well, the easy money's been made, Patrick. You know, when we talked about uranium on your channel in 2022, the response from the listeners was uniformly negative because it was out of favor. The price had to go up. That's the best time to buy something. So the easy money's been made. You know, Cameco's gone up from what, $8 to $42, $43. A basket of juniors, good juniors, is up uniformly 300%. The easy money has been made, and I've sold enough of my uranium stocks that I no longer have any net investment in them. And I've sold enough too to pay the capital gains tax on the sale. But I think the sure money is ahead of us because of really three factors. The first factor is, of course, Japanese restarts. In 2022, I said on your channel that the uranium market would be determined by the pace of Japanese restarts, and the Japanese are now restarting. They've gone from being a seller to being a buyer of uranium. Extremely important. The more important trend, however, is the emergence of the term market rather than the spot market. The term market is a contractual market where buyers and sellers agree to fixed quantities at stipulated prices over reasonably long periods of time. What that means is that the uranium market is the first mineral commodity market ever where there's contractual stability in price between buyer and seller. For every other commodity in the world, you're at the mercy of the overnight or spot market, and you never know as a producer what price you're going to get paid for your product over an extended period of time. In uranium, because of the new illiquidity in the spot market, and also because to finance a new reactor, and they're being built all around the world at an incredible pace, the financiers of these new plants are requiring the plant owners to contract for sufficient supply of uranium over the lifetime of the loan that the loan amortizes. And this has led to a really unique circumstance where a Kazatomprom or a Cameco or even a smaller company, a Lotus or a NextGen or a Boss Resources, can lock in enough volume at a certain enough price that the lenders and frankly the equity underwriters have some sense what the revenues, what the margins, and what the free cash flow will look like for the producers over 15 years. This doesn't exist in any other commodity. And as this certainty begins to manifest itself in the market, the sure money will be made in uranium. By the way, I believe, this is speculative, I believe that within 5 years, the lithium market too will transition from a spot market where there's tremendous oversupply to a term market where there is more certainty on behalf of fabricators that use lithium for things like lithium ion batteries and lithium producers. Well, I don't think that occurs in the next 2 or 3 years. I think over the next 5 years, it's almost certain. And I think this is a real transformation in mined commodities, which will be led, as I say, by uranium first and lithium second. I think investors in mining and mineral commodities need to understand the changing financial dynamics of these markets because it's going to be very important to how they make their money in the next 5 years.
All right. I mean, since you mentioned lithium, part of electric vehicle batteries, Nickel also is a component as well. But do you think nickel will get to be a term type of a thing, or is there just too much supply of nickel around?
I'm not sure that nickel will go into a term market. I hope it does. Nickel prices are depressed right now for three reasons. The first is that it got overhyped 3 years ago. It was the metal of the future. So everybody piled into it, not understanding anything about the dynamics of the nickel market. It got too high, so it had to fall. But two other things happened. Russia went to war. Uh, Russians are big nickel producers, and they sold inventories. Uh, that'll continue until they run out. Mr. Putin won't tell me when that is, sadly. Uh, the third thing, of course, is the incredible increases in lateritic nickel production in Indonesia. I flew over southern Sulawesi not too long ago, where all of this takes place. The environmental destruction that is occurring in Indonesia as we speak, as a consequence of lateritic nickel production, is appalling. Uh, I don't think that that's going to change anytime soon, but I believe that the individual citizenry in Indonesia, particularly on Sulawesi, will within 18 months cause the growth of that industry to stall. And I think, too, complying with responsible environmental standards is something that will occur in Indonesia within 2 years, which will drive up the cost of producing lateritic nickel, simply because I think the industry will be forced to change some of the practices which they're engaging in today, which is generating such appalling environmental damage.
Right. I've been reading also where Indonesia is looking at becoming a refiner of nickel as well. They don't want to ship it out. They want to keep it at home or refine it at home anyway.
I think they want to refine it, and I also believe that the Indonesians want to develop their own stainless steel and pig iron business. I think that they believe rightly that they have the labor force, they have the capital, they have the technology, they have the energy, and they have the raw material. I think you will see increasing involvement in Indonesia in copper and zinc smelting, and in nickel processing and steel manufacturing. And I think that's a good thing. I think Indonesia is very slowly coming around to being a modern representative economy. They are toying, just toying, with the rule of law. Um, I think all that's a good thing. I'm cautiously bullish about Indonesia.
Last metal I'll ask you about. I think you probably know what it's going to be. Silver kind of still remains a bit unloved, but what's your outlook for silver?
I'm not buying silver as a commodity right now because I have enough. um, in my experience, Patrick, a precious metals bull market, the precious metals narrative is always led by gold. The two primary investing emotions are, of course, greed and fear. And in my 50 years of investing, the precious metals narrative is always led by fear. There isn't sufficient fear in the world, except among non-US central banks, to drive the gold price. But I believe that fear is coming. I don't own gold, and I'll get to silver in a second. I don't own gold because I think it's going to move from $2,000 to $2,250. I own gold because I'm afraid of the possibility of a real rout in the US dollar, the type of rout that we saw in the decade of the 1970s. If that happens, I'm not saying it's going to, but if it happens, you won't see $2,500 gold. You'll see $5,000 gold or $6,000 gold or $8,000 gold. You'll see a truly stupid number. There's lots and lots and lots of corroboration of this in history. You don't need to look just at the 1970s when the gold price went from $35 to $800. You can look at the decade 2000 to 2010 where the gold price went from $250 to $1,900. If we experience a gold bull market, which I think is a probability rather than a certainty, in my experience, silver lags. The first part of the bull market is led by gold. But when the narrative gets to the generalist investor and they move down into the silver space, silver moves much further and much faster. And silver, as a speculation, is a coiled spring. While gold in nominal, not real terms, but nominal terms, has broken out into all-time highs in every currency on the globe, silver is still selling at half of its nominal all-time highs. From a speculator's point of view, for those people who have the psychological and the financial wherewithal to stomach volatility and to have a couple of years psychological patience, the hate that you talk about, the fact that people really hate the silver market, just like they hated the uranium market in 2022, is extremely attractive. It is buying into hate where the easy money is made. And there is no hate that is as sincere as the hate of a jilted lover. You'll recall that in 2020 and 2021, the narrative was all around the silver trade. That narrative caused the longtime faithful to silver to flock back to it at the same time that it generated a whole new group of silver buyers. And they were all disappointed. Silver didn't perform for them. And I know from my own 80,000 person database that the antipathy to silver is the strongest among those people who believed in the silver narrative in 2020 and 2021. As I say, there's no hatred as sincere as the hatred of a jilted lover. And silver has millions of jilted lovers who hate it with a real passion. That, to me, is silver's greatest attribute.
Right. I can totally relate to everything that you just said there, but still I I'm a silver guy at heart. I'm going to remain one, but anyway, it's not about me. Rick, before we wrap up, can you tell us, let's say, what events you have coming up that might interest the viewers?
You know, Patrick, I need to tell you, I failed retirement completely to my delight. And so I'm doing a whole bunch of things that I'd love to talk about. The first is Rural Investment Media. I've now graded 80,000 portfolios. If people like what I have to say about natural resources, they can engage in the conversation with me directly by going to Rural Investment Media. List your natural resource stocks. I'll personally rank them. No charge, no obligation. I'll rank them 1 to 10, 1 being best, 10 being worst, and I'll comment on individual issues if I think my comments have any value. If you like that service, then go to the Rural Classroom, where for free we have 200 hours of instructional programming on gold and silver investing, on natural resource stock investing, all absolutely free. You use that information to consume our charged services. April 20th, we're doing an mineral exploration speculators boot camp. As you know, Patrick, we've done a silver boot camp, we've done a uranium boot camp, we've done a royalty and streaming boot camp. These are 8 or 8.5 hour online tutorials. Importantly, you will have the ability to listen to the recordings of that for a year. So if you can't attend in person, you can listen to it on a delayed basis. And if you do attend it, you should listen to it on a delayed basis because we're going to give you more information in 8.5 hours than you can assume or absorb in 8.5 hours. Importantly, there's a $99 tuition, which gives you access to the recordings and is 100% refundable if you don't believe in your heart of hearts that you got your money's worth out of the curriculum. Our big event is, of course, the Boca Raton Natural Resources Investment Symposium. This is a live symposium that I believe is the single best natural resources investment conference on the planet. My preference would be for people to attend live because there's lots of conversations that take place that don't record well. As an example, wandering around the exhibit hall, watching Robert Friedland and seeing what booths he stops at, who he talks to, listening to the questions that he asks. But if you can't attend in person, you can join 1,300 people who attended on live stream last year. Whether you attend in person or on your computer, you will have access to the recordings of the conference for a very long time afterwards. And what will you hear? You'll hear great big picture thinkers, the Jim Rickards of the world, the Nomi Prinzes of the world, the Daniela DiMartino Booths of the world, the Grant Williams of the world, talking about the way the world really is. Not the way the politicians or popular media would have you believe it is, but rather the way the world really is. You'll have access to analysts and portfolio managers who have been active in natural resources and precious metals markets for 30 years. Not some Wall Street hack who failed at technology and failed at consumer expendables, but rather natural resource investment specialists. You will also, of course, have access to the living legends, entrepreneurs who have built multi-billion-dollar companies from scratch, talking to you about how they did it, what they were thinking, what techniques they used, and how the lessons that they learned made them better investors. Believe me, following Randy Smallwood or Ross Beatty or Bob Quartermain or Robert Friedland around the exhibit floor, paying attention to who they're talking to and listening to the questions that they ask is worth more than the price of admission. But then, of course, there's our exhibitors. Patrick, at most investment conferences, the qualification to be an exhibitor is simply a check that cashes. At our conference, we consider exhibitors to be content too. So any public company exhibitor at our conference has to be owned in accounts owned and managed by me. It doesn't mean that every stock that I own goes up, sadly. What it does mean is that every exhibitor is well enough known to me that I have risked my own time and treasure owning them. Every exhibitor is vetted. There is no other investment conference in the world, live or live stream, that can make that claim. No other investment conference in the world vets each and every exhibitor with their own money. Once again, whether you attend in person, which would be my preference, or via live stream, if that's more convenient to you, you will have access to the tapes of the conference. And once again, the absolute gold-plated money-back guarantee is there. If you don't think you got your money's worth for any reason, I will refund your tuition. Now, I need to say, Patrick, I've been offering this money-back guarantee for almost 30 years now. And the educational products that I've been able to offer are of such quality that I have had to refund a little less than 0.1% of the tuition fees that I've charged over 30 years. Nonetheless, that guarantee is in place.
Right. Rick, one more time. How can we get involved or attend this? Is there a link we can go to?
We will forward you a list if you want to, a link, pardon me, if you want to append that to this broadcast. But you can go to Rule Investment Media and say boot camp, or go to Rule Investment Media and say conference in the question and comment section. That's probably the simplest way. And I'll have my boot camp or my symposium staff send you the information around that. Alternatively, as I say, I can forward you a link to put on this broadcast to make it easy that way. It's up to you.
Yeah, okay. I think we'll put the link up for the viewers. But Rick, I really want to thank you once again for sharing your time with us. The insights on the metals, I think were just about the best that we've had in a while, and I really hope we can do this again soon.
I look forward to doing this at your leisure. I love the way that you frame your questions. I like the fact that you've researched enough of my earlier work that you can ask me intelligent questions, which are always more fun to answer.
I really hope that the viewers found great benefit in what you had to say here. So again, I really thank you for that.
Well, thank you, Patrick. I look forward to visiting with you again in this format and visiting with you too at the boot camp and the symposium. And when I come to Singapore, perhaps having a beer.
Should be fun. That was Rick Rule from Rule Investment Media. To follow more of Rick's views, go to ruleinvestmentmedia.com or follow him on Twitter at RickRules. That's rules with a Z. If you like this video, please do subscribe, hit the thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.